Hey everyone, it's Kirk here again at Option Alpha. So this is part 2 of behind the scenes for my personal ORB strategy that I'm trying to find. I'm not sure if we're going to find anyone in this video. I don't know yet. We're going to go through some more backtesting in part 1, which I'll link to right below this video. We kind of described what opening range breakout is and why I want to include it as part of some of the 0DTE trading that I'm already doing, how I kind of see it fitting into my current bot strategy. So this video is going to focus mainly on doing some more backtesting, starting to explore other ways that we can possibly, improve or enhance some of these ORB strategies and try and ultimately get to the point of finding an ORB strategy. If we do in this video, great. If we do in the next video, great. I'm just going to take you behind the scenes as we go through this. So first thing I'm going to do is I'm actually going to start out because the last video that we did, and I know a lot of people had questions on this, that video that I did the last time, I just threw up a random ORB strategy that I backtested just to show you how backtesting works. So I'm not going to go through the process of backtesting individually every single one of these because you can do it and I've showed you it in that video. But I want to go through the process that I went through to ultimately get to kind of an ending point that I'm at right now and kind of talk through it as we go. So first thing that I did is I went into the community into bot templates, and I just typed in ORB. And this is an easy button for everybody. It's like, don't recreate the wheel. There are already tons of templates and bots that other people have created, and go through these and look at how people have set these up. And again, in many cases, people will share their backtests or their strategy or their versions. I mean, this one's version 50 of this particular one, which is kind of cool, but there's a lot of different ones in here that you can look at and get a first, glance at it, get a good head start without having to recreate the wheel from scratch. So the one that I actually took was the one that Jack had originally shared, which was the ORB 60-minute 15 wide. That is this backtest here. So this is the strategy that his is based on. Good strategy, like it, but I want to see if I could possibly improve it, possibly enhance it with some of the things I'm already doing in backtesting. Could I find something that kind of fits my personal style a little bit more? So this is the first one. This is his version of the backtest. He's running the short put spread and the short call spread here. These are $15 wide. If we actually open this up, you can kind of get a look at this one on the right-hand side. Basically, it's a 60-minute ORB strategy where in this case with a short put spread, you're looking for a break above. It runs until about 12 o'clock. And then you got the range width of 0.2% or more, skipping FOMC meetings. That's basically the same thing that you're doing on the call side. You're just doing it the opposite direction. So you're doing the same thing, 60-minute break below till 12, 0.2% or more, skipping FOMC meetings. Okay, very simple strategy, interesting strategy. I want to see if I can improve on it. So first thing that I did is I actually ran the $10 wide version. This is just for my own good sake, just to see, did it dramatically improve it? Did it improve performance? It was about the same. I won't bore you with this one because there's a lot that we can get to, but generally speaking, it was maybe marginally worse, if anything. So I think that $15 wide, although position size wide might be a little bit, more aggressive, ultimately you're going to get to a point where you have potentially smoother returns. And you can see the difference between 10 and 15 here, significantly smoother returns just in the P&L curve adjusted. All right, so what I did after that is this is where I really kind of go through my own personal process in doing this. There's no set way to do this. This is just how I do it. So I'm just kind of sharing as I go. But the first thing I did is I set that main one up here, which is the same short put spread that Jack was using, which was the bullish breakout, $15 wide, all basic settings. And then what I did from there is I clicked on the 3 dots here and then I created another variation. That's how I did all of these additional tests, is just creating another variation from that test. So the first variation that I created was doing all the same stuff, except what I did here, and I did include a little bit of slippage, by the way, and what I did include here was risk-reward ratio of at least 10%. Now, the reason I did that is because I know that some people have said off and on, not that it's always the case in the market with pricing, but sometimes the pricing just doesn't justify a $15 wide position on one side. And so I can understand that. So I thought, okay, well, why don't I set some sort of barrier here at 15% or 10% risk to reward to make sure that I'm collecting enough premium for a $15 wide spread that I'd be taking on one side. So I set that one up there. I also set up the $10 wide and did a $10 wide with 10% risk reward as well, just because kind of mimicking the same 10% or $10 wide spreads that I had there, just to see if those ultimately ended up, kind of eclipsing the other ones. You don't know if that's going to happen. These did not, so these did not perform as well. You can see these are the 2 ones down here. So what you're left with is B. Now, if you just look at B right now, and this is where I want to kind of, this is just my own personal take on this, so you take from it what you will. But if you just look at B right here, I think most people would immediately dismiss it and say it wasn't a better performer. It was underperforming the entire time, and dollar-wise, it underperformed the entire time. Okay, I understand that, right? Valid point. But let's look at some of the metrics on B. If you look at some of the metrics on B compared to A, and so again, just forget C and D for right now. We can kind of remove those if we want to. But if you just look at some of the metrics on here, look at your maximum risk was about the same. Your maximum drawdown at any point was a little bit less here compared to A. Your profit factor was actually better with B. Your win rate, you did sacrifice just a little bit here, but you did trade significantly less. I don't know, trading a lot. We already do a lot of 0DT trading, or I do it right now, so I don't need something that trades 5,000 times. So that was interesting, right? And then you go down here to some of these other metrics, and you get your average P&L per trade is almost, not nearly double. It's like, but it's 75%, whatever it is. And your return on risk is significantly better. Your risk to reward is significantly better because you're just over that threshold. So you can see here the 10% risk to reward. For most of the ones in A, you were basically right there, which means that you did have a bunch of positions that actually dipped down below there, were probably really, really low value positions. And you just didn't get that with B. So if we go through here and you go to your risk reward here, and we kind of, let's just vertically sort it by here. Yeah, these are the ones that I wanted to avoid. So like these positions here where I'm taking $1,400 of risk for $33 to $18 of potential profit, although they worked out, it's just not the positions that I ultimately wanted to take. So that risk reward filter is aimed at trying to remove some of those a little bit smaller positions where you're taking on big risk and maybe it doesn't work out all the time. Now, ultimately, the funny thing with this is, again, ultimately this strategy A was the total dollar winner. So it was the total dollar winner, but like for me, when I look at these metrics, I want something that, I can actually live through, where I don't want to go through a $1,500 loss when I was trying to make $30. So you can see here for B, and these are the trades I'm looking at on the right side, these ones had a minimum risk reward filter. So you can see the minimums that we were taking for some of our smaller profit trades were significantly higher. So at least we were taking some higher ones there. So for me personally, I like the idea of potentially incorporating B, and I continue to move through this process with B as kind of my newer standard. It wasn't the highest risk reward one or highest total capital one. I don't always go for the highest total capital one. But I do also appreciate that the P&L chart was a little bit more stable, and that's what I'm looking for this strategy. It's a complementary one that gets added to my other 0DT strategies. I also do want to add a strategy that has a higher win rate. That's good because some of my 0DT strategies do not intrinsically have a higher win rate, so that was important to incorporate here as well. So moving forward, what I did is I basically took mostly strategy number B and used that as the basis moving forward. So you can see what I did here in the next set of tests. I still left test number A, which was still the highest P&L here, which was the full bullish breakout, $15 wide, no other filters in there. I left strategy B, which we just talked about here. Strategy B and strategy C almost exactly overlap. But here's what I did next. So what I was testing here was I was testing ADX. I like ADX because I use it and incorporate it into another bot. It's just like a little bit of a measure of trend strength or kind of momentum, if you want to call it that too. But I like incorporating that because I do find that sometimes just a little bit of filtering around ADX will kind of weed out things that make the backtest a little bit worse. And it's not getting out everything, but it's maybe getting out or removing some of the stuff for those time periods where there's not a clear direction. And for something like this, which is very directional with an ORB breakout where the market's breaking out and you want to trade that breakout, I thought it was interesting to possibly add ADX. Where we maybe could go in the future with this, or maybe you could do this and link to it in the video in the comment section, is also looking at other ones like RSI and CCI and seeing if any of those have any play on this, just where those are at the time that you get those breakouts. So what I did here for C was I did 10% risk reward, which is the same one as B, and I also included ADX of 10 plus. Now, B and C were exactly the same. So you can see here there's no difference in there. They ended up being the exact same. So a 10 ADX reading or plus was basically the same as strategy number B. So effectively they're the same. And on this chart, again, it's going to be the purple one because that was run last. The next thing I did is I added D, which was ADX of 15. And when you added D, you can see that you actually got a marginal improvement over strategy B. A lot of the same metrics stayed basically the same. There's a lot of stuff that was similar, but what you did improve on is you did improve on things like profit factor. You did improve your total overall return, so that was good. You go down here, you improved your win rate from 86 to 89 or to 90%. And then down here, you improved your return on risk from 5.5 to 6.5 essentially. And then after that, what I did is okay, well, if 15 was good, let's try 20. Let's try to, kind of stress test this. And 20 was interesting because 20, although you had much better trades overall, like the quality of trades were potentially better, your win rate was better on ADX 20. What you did see that your total P&L dropped significantly. I mean, you were back down below strategy number B here. So you can't look at everything in a silo and say, okay, well, it's just profit factor, or it's just win rate. That's the wrong way to approach it. And so you can see that in this case, E actually really did kind of significantly underperform across the board. Your return on risk was really good, but you only did about 80 trades. So it was very low trade count. And again, you gave it all up essentially, and it was the lowest performer. So in my opinion, I think some of the metrics are good, but it was maybe too far. So that ADX of 20, probably taking it just a little too far, okay? So for right now, what I've basically done is I basically stuck with this one, which is test D here for my short put side, and I tried to break, I didn't know if I talked about this in the beginning, but I wanted to test each side independently and then kind of combine them together, and that's what I've kind of basically done here towards the end. But strategy number D here was the one that I added and is my newest working version on the short put side. I don't know if I'm going to run that one, but that's the one that I have on the short put side. Bullish break, $15 wide, 10% risk reward, and an ADX filter of 15. That gets us this marginal improvement in ADX here and kind of smooths out the whole thing. Now, when I go to the other one, the other thing that I tested was the short call side. Now, I didn't do as much testing on this right now. I might do some more testing on this moving forward. If you guys have any ideas, let me know. But I tried to incorporate some of the things that I was doing on the put side, starting to do that on the call side as well. So first round that I did of testing here was, again, taking that base short put spread that we had from the one bot strategy that was shared, and now incorporating the 5% risk reward. So again, what I'm trying to do here is I'm trying to say, look, if I'm going to get into a position, I want to make sure that I'm collecting enough premium such that I'm, at least being compensated something for the amount of risk that I'm taking if it's a $15 wide position. And so in this case, I did a 5% risk reward ratio. You can see that did improve things on a P&L basis. So you did have a marginal improvement here. At some point, I think I actually started with maybe like a 10% and it was significantly worse. So I actually got, kind of worked it down to something around 5-6%. In this case, I started to nudge it down just even a little bit. So 4%, you can see 4%, which is strategy number C here, was an improvement as well. If you go down here, you can see that the profit factor is starting to inch up. We're starting to get improvements in the win rate across the board. So these are good things. I mean, these are good metrics across the board. Your return on risk is, going from 2% to 3% for the short call spread side. So those are good metrics across the board. And then what I did, and I thought this was actually pretty interesting the way that I ran this one, is I thought in this case that, and this is just a random one from when we just also included these new filters for events in here. So I might do some more filtering around events. We'll see. But in this case, what I actually did is strategy number C, and basically everything else in here was actually skipping FOMC meetings. So, and I understand the logic on that. In most of the bots that I trade, skip FOMC meetings. But what I thought about on the short call spread side was I thought about, okay, well, if the market's already going down and then we have FOMC meeting, maybe that continues to make the market go down and, kind of push the market lower, or maybe the market's pricing it in. I don't know. Either way, I just tested, hey, what if we don't skip FOMC meetings? So in this case, there's no skip down here for FOMC meeting, which means that on the short call spread side, we're actually trading through FOMC. So I left the tag in here for FOMC just to specifically call the fact that we're actually trading through it. And look at the improvement that you got in your strategy for actually trading through those. It was almost like those Fed meetings were very, very juiced up heading into the Fed meeting, because this is trading in the morning, heading into the 2:30, afternoon Fed session. And so you actually saw, and this I thought was the more surprising thing, is you actually did see an improvement in your profit factor. Your total, P&L was actually significantly higher also. And you saw an improvement in your return on risk. So you were actually compensated for all of those Fed days that you essentially skipped out on previously. So I thought that was very interesting, which means that at least for right now, strategy number D, which is going to be trading through Fed, so that'll be interesting, is the base case scenario on the short call side. So if we bring these together, this is where I stand right now with these two strategies. So I've got my short put spread, which is the $15 wide still, 10% return on risk, ADX 15 plus. And then I've got the bearish short call spread, which is $15 wide, 4% return on risk, and FOMC. We're trading through FOMC. What I like about this combination of strategies for me personally with just one bot that I'd be running on this is it's got a high win rate, which is very good. I want a high win rate strategy that I can incorporate into what I'm doing already, because some of my bots are lower win rate strategies that I'm running. This one's got a good profit factor, so the overall profit factor on the combined strategies is very good. I still like it. I mean, total P&L looks good. The curve of the chart is actually pretty impressive. So I think when you kind of get down to it, it's not perfectly straight. You do have a lot of periods here where you go through drawdowns. You can see max drawdowns here. These are periods when you go through drawdowns, so you can just get a flavor for it. It's not uncommon for this to go through 3 to 1,500, 1,700 drawdowns. Like, these are very, very common for this strategy. So just be prepared for that. That's one of those things you just got to be prepared for. There looks like there's a long period here of sideways action. Looks like there's even a period now that's going through of sideways action. But if you just kind of take a look at the overall P&L curve, it's, relatively smooth, and that's what I wanted. So I don't want a P&L curve that looks like this, right? Like that's very hard to trade through. And the combination of these two strategies, they kind of zig and zag at different periods, which is very, very good. I think it's, pretty favorable. So overall return on risk is pretty good, decent, numbers and metrics, all stuff that we can kind of live by. Loss streak pretty low, so you only have 2 losses in a row. You got 30 wins potentially in a row. These are all things that we can kind of live with. So that's where I'm at now with my ORB strategy, kind of behind the scenes. This is kind of the newest, if you want to call it, base case. I've saved this one to my library. Save this backtest. I have a folder in here, I just name them as like Kirk's variations and stuff like that I've saved in my backtesting. So if I go to my backtester, save backtests, you can see these are all the different ones that I have here. And these are my final versions final variations that I'm currently working on right now. So I will continue to share these. I do want to do some more testing on the call side. I think there's some other things that we can test in here. I do want to also test out some of the additional event filters like CPI, CCI, things like that, PCE. I want to make sure that, maybe we should be including those, shouldn't be including those. We did a video on that last week, but those are also good ones to test out for just different environments, particularly with the momentum strategy, just so we know what they are. If you have done any other testing on ORB that's, complementary to this, or you take these bots and these strategies that I ran through the links below and test your own variations, please let me know. Shoot us an email, community post, tag a comment in this video. I'm not done yet, but I'm definitely at a point where I'm starting to feel a little bit better about these strategies and potentially starting to run a strategy very similar to this one. So I just don't know if I've done enough testing on the short call spread side to know if this is the ultimate end all be all. So I want to take my time on it and see what else is out there before I keep moving forward. But this is the process that I go through. Lots of testing, lots of variations, things that work, things that don't work, and ultimately might find something that I can turn on. So if you've enjoyed this process, please let me know. Subscribe, like, share, add a comment below. That would be really helpful. You'll get all the links to these backtests below this video, so you can check those out. And until next time, happy trading.